Let's dive into the retail market trap. Is there a trap brewing here? Guys, we're going to break it down for you. I've got a really good guest, of course, which is going to lead us into where the market trends are heading. Before we do that, I want to thank our sponsor, and that is BTCC, where you guys can go out there and do some trading, whether you're doing copy trading, all sorts of different abilities over there, and you get a 10% bonus on your first time deposit. Check out btcc.com. Use our link down below. Lots of other goodies that they have for you. I want to bring in Mark Yusko from Morgan Creek Capital. He's been on our show before, but nice to see you again. Mark, how are you?
Great to see you. Doing well. Happy spring.
Yeah, finally. I can tell because my sinuses get going in the springtime. Magnolia trees in Florida are beautiful things, but not beautiful to the sinuses in some cases.
I'm with you.
Hey, Mark. Yeah, exactly. Listen, we're looking at a couple of issues right now with the Clarity Act. Big banks, some people say, are quietly killing this by simply stalling the market, the markups into May. If that occurs, because we've had several out there, including Chairman Scott, talking about the issues of not getting the markup fast enough. What's your opinion right now on Clarity? Do you think we are at the risk stage of not getting it at all?
Sure, but I mean, definitely there's a risk, Paul. I just don't think that's going to happen, unfortunately. I think Clarity in its current form is a horrible bill, right? It's been written by the usual suspects, the incumbents who are backed by, you know, big money in the incumbents, big banks. And, you know, they've said it out loud. Like they've said the quiet part out loud, right? You had, you know, Moynihan at Bank of America say, well, you know, we'd lose trillions of dollars in deposits. Yeah, yes, you would, because if you don't pay people for their capital and they can get paid somewhere else, they will move. And, you know, it's just interesting. I think the Genius Act and Clarity together, I believe, were written in such a way to try to forestall the inevitable, which is the transition to a better form of money and where we can be our own bank. Yeah. But, you know, but I do think that there's enough people on the other side pushing for real regulatory change and regulatory clarity that, you know, we're at that funny divide that ends up with no action, which, you know, maybe that's good for us long term.
Okay, so would you give it, you know, an over 50% chance right now of getting through?
I think most legislation eventually passes. It's just the timing that's hard. So I think it will definitely pass in some form, so greater than 50% chance. Okay. But I think the current form is bad enough that enough people are still fighting it. Now, if you can nudge Brian Armstrong, which it appears they have, into their camp, you know, he went from public enemy number one in the Wall Street Journal to like lobbying a little bit for Clarity. You know, I still don't understand how Senator Lummis completely flipped from, you know, an open bill supporting Trump, strategic Bitcoin reserve, to now regulatory capture in the form of Clarity.
So in your opinion, it's a bad bill. If you had your wishes, you would let this die.
Again, today is the birthday of the Roman Empire. So I do this, right?
Okay. All right. Yeah. All right. Well, there you go. Well, let's move on to a little bit around what's happening in the war, because obviously we are dealing with issues right now that, you know, it's interesting too, because everything that happens in Iran and the Strait seems to have a direct impact on what's happening in crypto. Where do you think Trump and this play has been bad for crypto in general, or do you think this is just global macro doing global macro stuff?
Again, such a great point, Paul. Look, crypto, Bitcoin, crypto broadly, it is just a giant macro trade, right? What it is, you know, crypto per se, stable coins and cryptocurrency are better rails for doing finance of the future. So the financial services market will eventually all be on crypto. Now, some say it'll all be on Bitcoin. Some say it'll all be on Bitcoin, Ethereum, and a few others. At the end of the day, we'll find that out. But ultimately, everything, right? Every stock, every bond, every currency, every commodity, everything is going to be digitized. We backed a company Figure that is helping put real world assets on chain for the first time and basically competing against DTCC. Right. So I do think this is all going to happen. I just think, look, the president said whatever it took to get elected. That's what politicians do, right? And so he made a bunch of promises. I'm a big Maverick fan. Son, your ego's writing checks your body can't cash, right? Top Gun. So he can't do the things that he promised unilaterally, so he needed Congress. Well, Congress, most of them are funded by the people that crypto is trying to displace.
Right.
Ms. Warren, for example. So I'm not saying he's good, bad, or indifferent, other than he's been ineffective at pushing the legislation he promised because, well, one, presidents don't make legislation. They sign it after Congress does. And two, his team is good at certain things, but they're certainly, what it appears so far we've seen, not really good at affecting much change of any time. Yeah. And then this gambit in the Middle East, we could spend all afternoon talking about it. I just think complete disaster on every front. We got 800 ships stranded in the Strait still, despite it, being the blockade, and then the blockade of the blockade, and then we're open, but then we're not open. And at the end of the day, you can't, I don't believe, right? And history would be on my side. You can't win conflicts halfway around the world. We've tried dozens of times, pretty much lost them all. And, if it escalates to a world war, we're undefeated there. But I think the skirmishes tend to be just long funding acts for military spending, and that's not really good for everything else.
Sure.
Except for money supply. Global money supply, Paul, is on an extreme ramp, which is partly why, since the shooting started, the best performing asset has been Bitcoin. Yeah. And it's not close, right? Gold is actually down since the shooting started, and stocks are basically flat. Bonds are basically flat. Bitcoin's up. So it's interesting.
So you look at the S&P 500 hitting all-time high now again. Here we go into the end of the year. I want to play a clip for you. This is Tom Lee talking about what could fuel this next phase. Take a look.
So I think investors viewed the war and the start of the war as a time to take risk off the table, which was very different than what we saw a year ago when investors were buying into the terror flows. And now I think that the downside tail risks have been removed for the war. Hedge funds have been early and they've been adding risk, and that we can confirm that from talking to our clients. And I think now it's retail investors that are now beginning to take money off the sidelines and buy stocks.
Maybe not just tariffs, but anything else politically that's happened. I mean, buy the dips has become a well-known catchphrase. So it's surprising that they were, you think, kind of going the other way this time.
It is surprising. I was quite surprised because I would have assumed if someone asked me in 2026, a war is going to start, what will retail do? I would assume that they'd buy the dip. I think the state of the consumer is one thing versus maybe how they might hear in a radio commercial or the surveys, but I do think the consumer is in better shape. So I think the retail investor will end up chasing this.
Wow. So retail chasing this, you look at the fear and greed index. I don't know, Mark. Do you buy this right now?
I don't even buy it a little. I mean, I don't, actually don't agree with anything. And I like Tom, but I don't agree with anything he just said. The data actually doesn't support it. And there's this confluence of, or I'm not confluence. There's a conflation of terms. Everyone talks about retail money, but they don't take out essentially the institutionalized retail, which is every 2 weeks, people's 401ks and 403bs go into the market. That's not retail speculation. That is your pension fund that went from defined benefit to defined contribution back in 1986. So that money just goes in and it's dumb, meaning it's rules based, it's passive, it doesn't get to think, it has to buy whatever has the highest market cap. And so that just continues to buy. The other thing that doesn't jive with what he's saying is, retail going to the sidelines. Options activity and single day options are the highest they've ever been. And so, yes, there's speculation. My view is the speculation is small. It's kind of like when people talk about Robinhood versus Schwab or Vanguard or Fidelity. Yeah, it's growing really fast, but the average account is $4,000. It doesn't really matter. Now, it can matter for a single stock, like what's happening with Avis Budget. You can engineer a short squeeze like what happened with GameStop. But for the overall market, it's just not enough money compared to what the boomers, right? My brethren and sisterin out there that own all the assets. Look at the difference between the top 10% and the bottom 50% in terms of ownership of assets.
Huge difference.
It's all at the top. And those people, what are they buying? They're buying bonds. They're not buying green bananas, and they're buying bonds. And that's a very different dynamic. And it's partly why we see more deflationary forces than inflationary forces. We see devaluation forces, and we see oil price increases. And that's the last one where I don't agree with the consumer being in good shape. The consumer was expecting the largest tax refunds, I think, in history. That's just law of large numbers. But most of it is going to be totally erased by the fact that gasoline prices almost doubled. Yeah. That was the worst decision, I think, in terms of the incumbents wanting to win midterm elections. If gasoline prices are still over $4 by fall, they're going to get slaughtered. I mean, it's not going to be close.
Yeah, I think this is the issue. We are at the line, I think the line in the sand right now from a macro standpoint. And I am, to your point, I just don't buy this market recovery right now. I'm still super skeptical. I'm very cautious right now in terms of what plays are out there. And you look at this and then you kind of consider what's happening with the Fed. You've got Warsh getting ready to jump in, the nominee. He's going to potentially right now keep monetary policy somewhat independent, and he claims that he is. But what do you think right now? I mean, the Polymarket.
Well, Warsh is not independent. I mean, Warsh is like part of the family. I mean, it's an engineered system. So now they'll have Treasury Secretary and head of the Fed both in the club, steering in a certain direction. And look, ultimately, this is the only way out. Right? What this group of people is trying to engineer is something that mathematically shouldn't occur. A market can't really be worth much more than the GDP that produces the market. In fact, it should be worth about 70 cents on the dollar because remember, it costs money to make money. Right? When we run a factory, we have to spend for electricity. That's the crazy thing about OpenAI. They take in $1 of revenue and they spend $3.58. You can't make that up on volume.
I can't believe I'm saying this. I'm thinking you might actually be agreeing with Senator Warren on this. So I want to play a clip of Senator Warren talking.
First time for everything.
Let's play it.
Trump has made clear that he does not want an independent Fed. In fact, he has said, and I quote, "Anybody that disagrees with me will never be Fed chairman." And he's made clear that you are his sock puppets, saying last week that interest rates will drop, quote, "when Kevin gets in." Yeah, I think they do. Not when economic conditions change, we'll get lower rates. Not when the economy needs it. Nope. He said, when my guy, Kevin Warsh, is in there, we'll get the interest rates that Donald Trump, wants. So independence takes courage. Let's check out your independence and your courage. We'll start easy. Mr. Warsh, did Donald Trump lose the 2020 election?
We try to keep politics, if I'm confirmed, out of the federal.
I'm just asking a factual question. I need to know, I need to measure. your independence, and your courage.
Senator, I believe that this body certified that election many years ago.
That's not the question I'm asking. I'm asking, did Donald Trump lose in 2020?
And I'm suggesting you in
I'm
2020,
suggesting
the Fed
you can't
made
answer that.
Wow, man. As much as I dislike Warren, she knows how to cut to the bone on these questions, and Warsh was unable to answer that. For her implication is that there's a reason for that. Do you agree with that? Do you think he is a sock puppet?
So yeah, but not of Trump.
Okay.
So
all right.
I do believe.
Tell me more.
I don't think Trump or any president that we've had for the last, 100 plus years is in charge, right? There's a different group of people that make the decisions and get the people appointed that they want appointed and get the people elected that they want elected. And that's how our system works, right? The people with the money pull the strings. So I don't think the Donald is the puppet master. I think he is a puppet himself. Trump didn't pick Kevin Warsh. Someone else said, this is the person you're going to put in.
Right.
Same thing with Jerome Powell. I mean, I'm not saying Donald Trump isn't the person that could make that type of decision, but he's not an economist. He doesn't hobnob with people in the economic industry or the financial services industry. He's a real estate guy. And so his ability to say, oh, yeah, that's the most qualified person for this job, it's not how it works, right? You get some people to help you identify. I would argue that there's another group of people behind those people that, sets these things in motion. And that's
interesting.
Why if you look at different cabinets, they look the way they do.
So you're in agreement, no rate cuts with Warren or with Polymarket, I see right now at least. No rate cuts this year.
I think what we know about Warsh is he actually is pretty well qualified, like maybe the most well qualified person we've had in a long time. I mean, whether he is beholden to a whole bunch of people who got him to where he is, we'll find out.
Yeah, we're going to find out this summer for sure of how this plays out for a Fed rate cut, especially if Tom Lee is even incrementally right on a market that continues to move. But if we do see a market pullback, then it all starts to get into one thing I think is going to be clarity. I want to go to our lightning round with you, and short answers. Clarity breaks the 4-year cycle for Ethereum. Do you think that if clarity goes through, it breaks the 4-year cycle for Ethereum this year?
No, I think the 4-year cycle exists because of Bitcoin code, and therefore and Ethereum follows Bitcoin and just it's a liquidity, waterfall. So I don't think so. I think it's good for Ethereum. Don't get me wrong, but I don't think it breaks the cycle. Humans are going to human.
Let's go for it. If clarity doesn't pass, we crash to a new yearly low on crypto in general.
No, I'll actually go the other way. If clarity does pass, we probably extend the bear market longer. I think if clarity passes, maybe instead of being September, October to get the ultimate kind of break into crypto spring out of winter, maybe that advances.
All right, so I'm going to say if it doesn't pass,
if clarity doesn't pass, we crash to no. I don't think so.
No. All right. Okay. Let's move on to this one right here. Circle learned their lesson on not freezing hacked funds. Do you agree on that one? Hacked funds.
So Circle will not freeze hacked funds.
Yeah. Okay. So yeah, that's the question. Do you think because they did not freeze hacked funds and they had the chance?
Oh, okay. Got it. I misunderstood. I thought this said that they did.
No. Okay.
No,
so you agree.
All
right. Okay. So you would.
Yeah, I agree. Actually, yeah.
Okay. All right. So okay. Then we went down the wrong tab.
Double
Tether.
negative.
Right. Tether flips Bitcoin after a successful audit. Do you think that would happen?
Tether's market cap versus Bitcoin?
Yeah. No. All right. Let's go on to this one right here. Trump term will be less chaotic on markets after the midterms when he loses?
Oh, for sure. I mean,
Okay.
because the third year is always amazing because the incumbent's trying to, keep their party in
Yep.
power. So they will pull out. I mean, whether it's
Gotcha.
putting pressure on the Fed, whether it's passing fiscal stimulus, whether it's, he's already promising
Sure.
the biggest tax cut in history, which never delivers, but he's promising it again. So third year of presidential cycles are always, the best.
Okay, all right. What would be the bigger catnip for institutional investors? Would it be revenue share tokens or token buybacks, do you think?
Oh, it's a great question. I'd give it maybe just a slight nudge to revenue share, although I like the token buyback,
Okay. Well, you're
roughly
institutional, so you would
I
go the
look, I
revenue.
think they're both attractive, but I give a little nudge to revenue share.
Okay. What will be the more successful new bank launch, Ripple and Circle, or if Robinhood gets their banking off the ground?
I
successful.
don't think Ripple's ever going to get what they promised, so I'll go with Robinhood.
Okay, Robinhood. Okay, let's go. Man, Mark Yusko, you're coming in hot today with some good takes here. What's politically worse for crypto industry sentiment right now? World Liberty Fi or what happened with FTX?
Definitely FTX. I mean, people are trying to make World Liberty out to be some big scandal, but it pales in comparison in terms of dollars. Look, presidents have taken donations from world powers. They did it through their foundations.
Sure,
right?
This
Now
is
he
just
does
a
it
creative
through
crypto way.
And why is it okay for the Clinton Foundation to accept a big, giant donation from the Saudi government? I've never understood that, right? Because if they're still in power, why should they be allowed to do that? But they were, and all the other presidents have foundations. So I just think it's a new age version of the same bad actor and
activity. What about this one? Is Boomer Capital actually worried about Bitcoin quantum risk? Do you think that's a concern right now?
I just on the verge of no. I think the FUD is really active. I think there are some people that are worried about it, but I think generally speaking, those of us, and because I'm a boomer, those of us who know anything about Bitcoin are not really worried about it.
Okay.
Quantum is one of these things that the idea is interesting. In practice, we're still a long, long way away, and I still contend that if I were gifted a quantum machine, the first thing I'm attacking is not Bitcoin. That's worth, Satoshi's coins are worth
market cap.
few tens of billions. The nuclear codes are worth way more than that. JP Morgan's bank accounts are worth way more than that. So I don't see it. But
here's the last question. Polymarket becomes the biggest insurance marketplace for investors. What do you think?
So I'm on record saying that the rebranding of gambling to prediction markets is the greatest rebrand in the history of rebrands. I mean, it's like, it's like trying to upgrade the world's oldest profession to, the escort service. I mean, it sounds a little better, but it's the same thing. And so I now trying to brand it as an insurance marketplace. No, I mean, it's still speculation and gambling. Now, can you say insurance is a form of speculation? No, it's a form of hedging, and insurance is about spreading risk. So I guess I'll circle all the way back to say it's certainly possible that if
I'm going to put you in the middle.
No, it's certainly possible that if people are willing to accept that this marketplace is a place to pool risk. Now, history has shown that these marketplaces don't actually develop. And the reason mostly is because regulators don't like it, right? If you think about it,
Well, there's a fight for it now.
We should have nationalized health insurance. Oh, no, we don't. No, of course you do. We don't want each state to be a separate risk pool. We don't want each company to be like, I have, 25 people in my company and I'm a risk pool. Well, that means if I have one person who has to buy an expensive drug, my premiums go crazy. That's just silly. I should pool with dozens of other groups.
Similar companies, yeah.
And the more you pool your risk, the better. So I can see the efficacy of broader, faster, real-time updated markets being, used for insurance.
Yeah. I think it will be. I'm kind of on the other side in the sense that I think Polymarket is going to go that direction with these prediction markets. Well, but hey, listen, we're gonna find out how these markets come down, especially if we get some regulation built around this. Mark Yusko, always fun having you on the show. Thank you so much for coming in today. We appreciate it.
Enjoyed it. Have a good one, Paul. We'll talk to you soon.
If you like this video, hit like and subscribe, drop a comment down below, and also join our free private member group. The link is in the description.